a major shift is unfolding in the crypto market, and XRP is at the center of it. Bank of America has advised clients to consider allocating up to 4% of their portfolios to cryptocurrency. This isn't a small suggestion, it's a signal from one of the world's largest financial institutions. Managing trillions in client assets, a 4% allocation could mean a multi-trillion-dollar influx into crypto markets. That kind of institutional backing changes the dynamics of demand, especially for assets like XRP, Bitcoin, and Ethereum. The bank's guidance isn't just advice, it's likely to lead to new crypto products for retail and institutional clients, opening a floodgate of capital through regulated channels. That's a structural change for crypto markets, and XRP is positioned to benefit. Meanwhile, President Trump's executive order is pushing for regulatory integration of crypto into the U.S. financial system. This executive action is expected to be followed by the Clarity Act, which could provide a legal framework for crypto to operate within traditional finance. These developments create a convergence of institutional and regulatory momentum that could accelerate crypto adoption. The market is reacting to. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. This and XRP is showing signs of increased institutional interest. When banks begin offering crypto products, more investors will have easier access to assets like XRP. That increases liquidity and could drive prices higher. But the market is still waiting to see how these products will be structured and which assets will be prioritized. The next signal to watch is whether major U.S. banks begin rolling out crypto offerings aligned with Bank of America's guidance. If they do, it could confirm that the institutional shift is real, and that XRP is a beneficiary. The regulatory environment is also a key factor. If the Clarity Act is passed, it could provide clarity on how crypto is treated under U.S. law, which would reduce legal uncertainty and encourage more institutional participation. This could lead to a broader acceptance of crypto as a legitimate asset class. The timing of Bank of America's recommendation is also significant. It comes at a time when crypto is gaining more legitimacy in traditional finance. The market is now testing whether this momentum can sustain itself. For XRP, the next signal to watch is whether institutional investors begin to increase their holdings ahead of product launches. If that happens, it could signal a broader shift in market sentiment. The evidence also shows that crypto analysts like Levi Rietveld are highlighting the potential impact of these developments. He calls it incredible news, suggesting that the market may be underestimating the scale of the shift. But it's important to note that while the signals are strong, the market is still waiting for concrete actions. The next few weeks will be critical in determining whether this is just. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A temporary trend or the start of a long-term shift in how traditional finance interacts with crypto. The combination of institutional recommendations, regulatory progress, and market sentiment is creating a unique environment for XRP. If the trend continues, it could lead to a significant price movement. But until we see more tangible developments, such as new crypto products or increased trading volumes, the market will remain cautious. The next signal to watch is whether major banks begin to act on Bank of America's guidance and whether the Clarity Act moves forward in Congress.